What is up, YouTube? I'm Ace Palomero, South Texas Realtor, proud son of the Rio Grande Valley, and lover of history. Ladies, in case you did not believe your boyfriends or husbands when they told you that every guy thinks about the Roman Empire on a regular basis and that it's totally normal, I am here and now corroborating what they told you. Also, you need to clarify whether you're talking about the Roman Empire after the dissolution of the Roman Republic, or after it split into the Western and Eastern Roman Empire, later known as the Byzantine Empire, or the Holy Roman Empire, which some historians say was not really Roman, nor was it really an empire. I guess we could talk about, the state of the Roman Empire before it fell and compare it to, the state of Western society today. But let's go ahead and talk about the Great Depression, since I want to piggyback off the last video's mention of the Silent Depression. The Silent Depression is a viral, tag going on in TikTok and other short form content platforms. But yeah, let's talk about the Great Depression, and we're going to compare and contrast it to the economic state today. The Great Depression was this economic shock and just massive downturn that happened between or I guess historians and economists, they tend to agree that they happened between 1929 and 1939. GDP, or gross domestic product, it fell by 15%. And to give you context, GDP in the great financial crisis of 2007-2008 worldwide only fell by 1%. Personal income, profits, tax revenue, and prices, they all fell. And international trade dropped by 50%. U.S. unemployment was 23%. Some other countries had their unemployment go as high as 33%. This article by Business Insider, according to them, there were several causes, things that led up to the Great Depression. One of them was the Roaring Twenties. Increasing consumer demand led to overproduction. Back then, financial institutions were heavily involved in stock market speculation. Regarding the stock exchange, there was way less regulation. And also, this is when margin buying became a thing. So basically, margin buying is buying stocks on credit from your brokerage. And back then, you could buy stocks basically with 10% of its value. So if something costs $100 for that stock, you could just pay $10, borrow 90 from your brokerage and get that stock. And it'd be great if the stock went up to 150, because you made that profit off $10. But if it dropped, there's a lot of risk. Now, most people agree that the Great Depression started with the stock market crash, or Black Thursdays, October 24, 1929. And the market actually lost 85% of its value from 1929 to July 1932. So that's 3 years. The oversupply and overproduction caused by this boom in consumption was what led, or was a big factor into this overvaluation. Businesses actually started to sell products at a loss, or goods at a loss, even before the crash. And there was also similar crisis in agriculture. Back in high school, at least when I went to high school, one of the books that was defining for me was The Grapes of Wrath. One of the strongest mental images that it invoked were companies, or big producers, essentially burning all these crops that they could not sell for a profit. one of the indicators, or I guess one of the traits of the Great Depression was low demand for all goods and high unemployment. Today, we still have low unemployment and still a high demand for goods just across the board, but I think the demand for goods is dropping. So, according to that Business Insider article, other causes of the Great Depression was missteps by the Federal Reserve. So, the author says, and apparently other economists of the time and a little bit after, they all agree that the Federal Reserve back then in the 1930s, they should have lowered the rates, basically made it easier for companies and individuals to get credit. Back then, they actually tightened credit. I think they doubled the rates, and that just made everything worse. Their idea was to discourage lending and borrowing, but at least according to these economists, it was not the best idea at that time. They also point to, I guess, constrained actions by the then president, Herbert Hoover. Like he did initiate public works, but according to them, it was too little too late. And another thing that article points to is the Smoot-Hawley bill, which is basically it increased the tariffs 20% on imports. Other countries retaliated, and U.S. imports ended up falling 40% in 2 years. It basically resulted in a trade meltdown. So, why is that significant to today's housing market? One of the causes of the Great Depression, I guess in my opinion, was the overvaluation of stocks. Overvaluation of stocks caused by margin buying. A lot of people who did the margin buying were new to buying stocks. Honestly, amateurs, right? That relates to today because one of the things that I think is overvalued, which causes inflation to be so high in our economy to be where it is the overvaluation of the housing market. So there was I forgot the name of it. I'll put it up on the screen, but there was one article that said on average houses in the U.S. are overvalued by 7.4%. Apparently, depending on the metro, it could be 3 times this amount. In my local housing market, according to ReVenture app, and the guy who created the app, he gets his valuations or his overvaluation or undervaluation percentage. One of the things he used to determine that is by comparing the median value or median price of the houses in that area or zip code to the median household income. So for my area, Hidalgo County, or the McAllen, Edinburg, Mission, MSA, Metropolitan Statistical Area, seems that the houses here are overvalued by 31.9%. And this this continuation of houses being overvalued or overpriced, it can't be sustained. There was just one headline from CNN saying that housing unaffordability hasn't been this bad since 1984. Yeah, 1984. What else happened in the 1980s? You had a recession in the 1980s. There was a double dip recession or W-shaped recession caused by an energy crisis. Apparently, it was also aggravated by the Fed raising federal funds rate, which caused manufacturing and the housing industries to contract. Now, I'm not a stockbroker, I'm not a financial advisor. This is not financial advice, but I was just taking a look at the stock market. The average, I guess, or the S&P 500, if you will, we're 5 years. It looks like it's trending down, but it's normal, right? You have peaks and troughs. 1 year, 6 months, or 1 year it kind of looks the same. 6 months it actually looks worse, and 3 months, if you look at the S&P 500 over 3 months, it does not look so hot. Reading this article says the investors are nervous, and that's why stocks are going down, and I guess a potential government shutdown looming is making them even more nervous. Now, regarding oversupply and overproduction, the PPP loans and the artificially low rates, all of those contributed to businesses actually expanding and more jobs being created, right? It's in the 2021 and 2022. But now that the loan money is like out or about to run out, and the rates are higher, the business expansion, the job creation, that's gonna stop, and it might even reverse. Now, regarding the Federal Reserve's actions today, as well as the current executive branch, there was no rate increase announced for the month of September, but it's still a possibility that they're going to increase it one more time before 2023 is out. And regarding our executive branch, this is from oversight.house.gov, and I'm just gonna read you the subheadings, the key takeaways, if you will. So the title is "Hearing Wrapped Up: Bidenomics Levied an Inflation Tax on All Americans." This was published September 20, 2023. Bidenomics unleashed massive new federal spending and debt only to deliver historically high inflation and falling real wages that are crushing American households. Despite President Biden's promise not to raise taxes on Americans earning less than $400,000, President Biden's spending and inflation crisis has most impacted low-income households and seniors relying on Social Security. The effects of Bidenomics are made worse by the Biden administration's growth and jobs-choking regulatory avalanche. And I'm gonna link that site, as well as all the sources all for my data, in the description below. But yeah, I guess whether regardless of which way you lean politically, everybody, unless you're a centimillionaire or a billionaire, everybody is being affected by inflation. Inflation is a tax on the middle class and on poor people. If you're ridiculously wealthy, you don't care that gas costs you $7 a gallon, or that a meal or a combo at Subway now costs you $15 to $20 if you got one of the prime subs or whatever. But if you're just a typical American, inflation is probably killing your wallet. And I mean, I talk to all sorts of different people because of previously because I was still at Starbucks, so everyone goes there. But as a real estate agent, I get to talk to people from multiple different tax brackets, and everybody's feeling inflation. One of the biggest differences between today and I guess the time right before the Great Depression is that there is more regulation. And one reason why they still haven't announced the recession is that unemployment is still low. Consumer sentiment, even though it's had a bit of a dip, is still relatively high. There are several content creators that I follow on YouTube, and they cover things like housing, economics, and finance, and a lot of their videos actually tie all of these in together. They all point to a potential black swan events that could essentially flip the economy. Now, black swan event is basically a unpredictable event, outside of what's expected, that has major consequences, right? To to give examples of a black swan event, you have the stock market crash of 1929. You have the stock market crash of 1987. You have the collapse of the Lehman Brothers right before the great financial crisis of 2008. You have the Fukushima nuclear disaster, I think 2011. And yeah, so I mean, just speaking about black swan events that could, basically cause, a massive downturn in the economy because of, I guess, the unexpected ramifications of that event. I mean, we have rising tensions between us and China, us and Russia. We have the border crisis on our southern border. I mean, election years next year. You see headlines about, this new strain of COVID and potential lockdowns coming back. Yeah, I mean, I see multiple potential black swans. Now, I'm not trying to scare anybody with this video. I mean, I guess the second point of it, besides, giving context of today, with the Great Depression of the 1930s, is just to make anyone who's watching this aware. And to remind you that you just gotta do what you can with what you have. Regarding, I guess, your money, this is not financial advice. Save everything you can. Like, prices haven't come down for anything really, and it's just more expensive to borrow for like everybody. I mean, rates are double compared to early 2022 and 2021. If you're thinking about investing, I mean, first you have to have enough to invest. Like, if you don't have any savings, you don't have enough to invest. And I mean, learn what you can. Like, read. You don't have to watch my YouTube videos, but there's a lot of free knowledge, not just on YouTube, but I mean, just quick Google search. And well, that's the thing about the internet too. Like, there's a lot of information, but because it's not in a peer-reviewed journal, a lot of the information is also garbage. So I mean, don't blindly trust anything or anyone. Check their sources. I put my sources down below, even though I don't put it in APA format or whatever. And check their methodology. If you remember back in even high school, right? Anything that you read, it was all cited sources, and the appropriate sources were down below. If the source was the author, it was probably like, a study that they did, and they put their methodology in the paper. So anybody who replicates their study should be also able to find similar results. Other than that, that's it. Yeah, so learn what you can. Don't trust just anybody. Verify what they say, verify their sources, and that's it. Bye.